Lemon, Costco, RH, formerly Restoration Hardware, they're on deck to report. We've got Costco higher. The other two are down fractionally. But the big name in the chip sector set to report is Broadcom. They're expected to post fourth quarter revenue of $17.5 billion, adjusted earnings per share of $1.86. As investors look to Broadcom's performance to gauge their AI bets, first, we've got breaking news. Cox Data reports that Tesla U.S. sales dropped to nearly four-year lows in November, despite the EV maker launching cheaper Model Y and Model 3 vehicles. We've got Tesla down 1% at the moment to $446 and change. Our countdown closer has Tesla as one of his picks. Jeffrey Small is unafraid. He's partner at Retirement Income Source. You know, whether it's China or the U.S., we're seeing their car sales and their car deliveries tick down month after month, quarter after quarter. Why are you not concerned about that?
Well, I think Tesla's present valuation, Liz, has nothing to do with the car business and all about the optionality of all of the tech that it has, from autonomous robots, autonomous vehicles, robo-taxis, energy storage, hardware margins versus software margins and the like. And so, but like you said before, the whole industry is dropping. And so the reason why we're trading at 209 times earnings, and then Michael Burry had zero effect on the stock price, is because of all the optionality that I just mentioned and the potential of that changing the market value math of the company.
Wall Street is strewn with the bodies of short-selling companies that tried to bet against Tesla. I have covered this stock since 2000, since well before it even went public. And no, Elon is willing things to happen, and he continues to do so. I think you're right. He wants to be seen as a tech company, and he certainly, XAI, I mean, they are building out data centers. I get it. The big robot situation, we've got one of them on the screen here, Optimus. That may be a little longer out, I think. So people have to be careful regarding that. And everything needs semiconductors. Nvidia at the moment, Nvidia's down. It has struggled. It's almost moving slightly in lockstep with Oracle. Oracle, of course, came out with its earnings yesterday. Investors freaking out, obviously, that they're spending way more than what had been expected annually on AI. Are you in the camp that believes, yeah, I'm getting a little uncomfortable with this massive spending on AI? Or are you saying this is a big change, it's an industrial revolution, stay in?
Well, the market's not buying everything labeled AI indiscriminately anymore, but Nvidia really is a long-duration AI utility, Liz, rather than a cyclical semiconductor company, and it's being misjudged here. Presently, Nvidia is cheaper than every one of its competitors, price-wise, stock price-wise, on a forward earnings basis for the next 12 to 36 months. And so, they're all growing very rapidly, and so that whole sector is going to do well the next 4 or 5 years. But I think you've got to make Nvidia part of your core dynamic here because of their ramp in revenue, their ramp in cash flow, free cash flow, their ramp in profits is the most out of the entire peer group. And despite the fear of large numbers here, which is really suppressing the stock, even though they are so large, they can continue to grow at the pace they've been growing, and they're going to do that again for 26.
Yep, I mean, it's early stages, clearly. Jeffrey, thank you for coming on. We appreciate you giving us your perspective.